Hey everyone, Dalton Grados here with another weekly newsletter for September 1st to the 5th of 2025. Of course, today, September 1st, being Labor Day, so the markets are closed. If you want to get real crazy, the futures markets are open until 1 p.m., but it's probably not going to be worth trading, and you should probably take the day off. But as we can see here, the markets are really still chopping around in its current range, which is a lot of what we talked about in last week's newsletter, which was written here on Substack. And if you're not subscribed already, you should be. First link in the description of this video, where I wrote about last week. There was not a whole lot to say. The market is looking forward to the Fed rate cut, which will come on September 17th. And last week we were looking for NVIDIA earnings. We did get that. Market continued to really stay in a range, but with the price action remaining in range, bias is neutral, key levels remain. And so that's what we talked about last week. This week is much of the same. We're really coiling up for our next move. We have kind of this rising wedge action going on. We've got our primary trend line here in the S&P and our secondary trend line, which we've been respecting, and really respecting this range between 6,500s and 6,350s, which is this pretty tight 150 point range here between this. Some people would call it an order block or a shelf, or just simply a level of support here at 6,350s, and then all the way up to the 6,500s. So as far as price action goes, there is not a whole lot to say. Markets move from excess to balance, and so oftentimes, most often, markets will be consolidating in a range, preparing for its next move. And as we've been talking about the past couple weeks, the next move is really going to come from the Fed rate cut, which we've been watching our CME tool, FedWatch tool, where the odds of the Fed rate cut remain around 89%, around 90%. So it's most likely that they're going to cut, and the market is pricing that in. If the Fed rather does not cut and or gives future guidance of that sounds hawkish, the market will not like that, because we've been pricing in this cut for quite some time now. So as far as levels, I'm watching this secondary trend line, which seems to be respecting, and the range down to 6,350s, between 6,350s and 6,500s. If we were to break below the 6,250s down here, we talked about this level being very important because it was the level that we held at the highs before the April tariff drop. And we came back to it. We made new all-time highs. We retested the 6,250s and strongly supported on our way back up to new all-time highs. I'm not really shifting my tone until we get back below the 6,250s. So anything above there, again, 6,320s, that would be really the top of this previous resistance turn support. Anything up there is really just kind of chop range around the highs. And that's a good way we can think of it. So market's really holding steady here. Not a whole lot of action going on. But, on a day trading time frame, you have some opportunities to trade in ranges. Actually, I prefer in low time frame trading to trade in the range because it's much more predictable, and there's more market turns to get in and out of for your short-term trades, your scalps. And so there's plenty of opportunity there with your large levels holding. So understanding once we get to this 6,500 range, that's a big resistance. Once we get down to these supports here, then that could be a potential turning point. Now, as far as events this week, today market is closed, so it's a shortened week. Typically on holiday weeks, we get not a whole lot of action in the markets, and I expect the same for this week. So much of the same continuing on. We have our regular manufacturing PMI, job openings, regular economic data, unemployment claims we get every Thursday, PMI. And so we're continuing to monitor that because, as we've talked about, if the labor market is showing that it's weakening, that will support a Fed rate cut. If inflation measures are showing that they are increasing, that will work against the case for a Fed rate cut. So that's where we really monitor our data between the labor market being healthy and inflation being under control. And while it is most likely that we will get the Fed rate cut in September, the market is always looking forward. And so what we're then going to be looking at is, does the data support continued rate cuts in the future if we get this rate cut on the 17th? As far as earnings this week, there's really only one major company reporting earnings that would potentially affect the market, which is Broadcom. That's a big tech company. They're not in the Mag 7, so it probably won't shake things up too much. But you are at $1 trillion valuation, so anything around $1 trillion is going to be one of those mega cap companies, at least in my opinion. So, be looking out for Broadcom earnings. That will affect the tech sector, and so we'll be looking out for that on the evening of Thursday, Broadcom earnings. Not much else to note. Now, in today's newsletter, I did want to give a spotlight to the CME Group's event contracts. So if you are familiar with trading futures, or if you're familiar with things like sports betting, the two have sort of married. And we now have event contracts in the futures market, which is really great for if you are following this newsletter, and you follow our levels. Rather than being an active trader intraday, these event contracts can allow you to bet simply if the market will close above or below a certain level. And so, it says here on the CME website, event contracts offer an intuitive way to access 11 of the world's most important futures markets. So this is basically what the contracts look like. And now we focus on the S&P, but you have NASDAQ, Russell, silver, gold, Dow, copper, Bitcoin, natural gas, crude oil, all of these markets. And you can simply bet on, every day, will the S&P daily close above or below a certain level? And you can choose different strike prices, and each one of those prices will have a certain odds. So you might, all of the contracts are up to $100. So you might bet $40 to win $100, or you might bet, $60 to win $100 if it's a more favorable probability. But it's a very simple way to get involved in the markets. So you simply choose a side, click yes or no on if the price will close at that level. And once you're in your event contract, it's locked in place. So it's a fixed risk and reward amount. You know exactly how much you are risking and how much you have the potential to win. The probabilities are priced in. And it's currently available with Interactive Brokers, EdgeClear, Iron Beam, Tradeovate, and Blue Line futures that you can actually trade these event contracts. So again, pretty cool. I've played around with it a little bit, and it's basically, if you're familiar with options trading, it's similar to selling puts or calls, but it's as if you were selling them just on a daily basis and collecting that premium. And you can get in at a much lower price point, and I think it's a lot simpler of a contract for people to get involved with rather than dealing with options. So, but it's the same concept of, you're basically picking a strike price and betting that the market will close above or below it. And if it does so, then your contract will be profitable. And it's a binary outcome. So again, thought I'd throw this in there. If you don't want to be a day trader, you don't have time for day trading, or maybe you are a day trader and you want to just add on to it because you're following your levels super closely, these event contracts are, I think, pretty cool. And again, if you decide to trade these event contracts or any contracts, make sure you are subscribed to this newsletter every week where I'm giving you either this video or written form on Substack, and I'm delivering it to your email via Substack every week, completely free, with all of the levels that I'm looking out for the week, so that perhaps you can be more profitable no matter which contracts you choose to trade. That's it for this week. I will see you guys next time.